Well, let's bring in Amit Anwani, who's joining us. He's analyst with Prabhudas Lilladher. In a recent note, they say that they continue to see multi-year growth in the sector. Amit, good morning. Good to have you with us here. Prashant this side. Just sort of talk to us first about valuations. Where are they for the top defense companies which have done very well? You know, and the aero side, HAL, the shipbuilders like Mazagon, or companies like Bharat Dynamics, etc. Where are valuations?
Right. So thanks for having me. So I think last time when we discussed, I think we discussed about the multi-year growth in the defense sector, obviously because of the prevailing reasons which are already there in place with respect to indigenization and a lot of other initiatives. With respect to multiples, I think obviously we are seeing the stressed multiples. So I think MDL would be about 23, 25, 1 year, 2 year forward. BL again similar. So all these companies I think are hovering between now 25 to 30x 1 year forward multiple, which is kind of stretched, I would say. But having said that, I think the fundamentals of the sector still remains very strong. There could be a decadal growth which can happen because of the order intake which is expected to come in, and we have seen all these companies have built in a very good order intake, including Bharat Electronics, HAL, and even MDL is awaiting a large order in coming years, and they already got a very strong order book. So I think with macros changing in the sector and the order intake coming in after decades, I think there's a decadal opportunity with respect to multi-growth in the sector, which will still be there. The current valuation looks stressed. We can't rule out any healthy correction at this point with defense space.
Okay. In fact, a couple of these defense stocks or, in this entire space, there are names which are being downgraded as well. So BEL is the stock that I wanted to pull up right now. Let's just get that stock up on board. It's had a phenomenal rally in the last 1 year or so. But this morning, Axis Cap has downgraded BEL to a reduce from an add. And they say that the stock is priced in a lot of the growth. The valuations for BEL now are at record highs, well above the 2-year average as well. The stock is trading at 28 times 1 year forward, and which is higher than the 2-year average mean. And they also talk about how a lot of these large defense orders that are coming from the government are prone to delays in payments, etc. So that could mean stretched working capital, impact on the balance sheet. So that is one risk factor. Amit, I wanted your thoughts particularly on BEL. Would you be as cautious as Axis Capital? And do you also believe that this potential delay in the defense orders is something that could keep a lid on the stock?
Yeah, Sonia. So I think BEL, we have a very long-term positive view. We had a buy rating last time at 145. Obviously, as I said, all the defense stocks are stretched. And as you rightly said, at 26, 27x 1 year, 2 year forwards. But having said that, if you see Bharat Electronics especially has accumulated almost, orders worth 11,500 already in first 5 months of the year versus their full year guidance of 20,000 plus with a lot of tailwinds. And they have been talking about orders coming in for next 2 years in the range of 20,000 plus. And we have seen past 2 years, there's been a pretty strong top line growth between 13-15%. And very good order intake which they have received with margin somewhat constant between 20-22%. So I think very consistent performer with respect to the order intake and numbers. Having said that, the order delay risk obviously is with many defense companies, but we have seen the order intake and order book swelling in past 2 years with all the defense companies. So even if there's some delay, if we built in for next, maybe any selective order getting delayed, I don't think it will be impacting the medium-term revenue visibility for sure. But having said that, as I speak, the defense spec, one should look with a very long-term perspective because the cycles are a bit longer. And we are seeing the structural changes as we all are aware from past 5-7 years within the sectors. The government is trying to localize, indigenize, and bring transfer of technology. So I would say Yeah, so I would say there's the growth outlook is intact with the sector.
All right, Amit, very quickly before we let you go, L&T is another stock that you track. It's opened up close to around 2%, been a big outperformer this year. Ahead of elections, well, you have, could be some bit of slowdown, but the Middle East orders will support them. What do you make of the stock at current reckoning, given that they have upped their buyback price as well?
Right, so they have raised the buyback from 3,000 to 3,200. Obviously, the buyback was also to support or improve the return on equities as well. I think this somewhat pretty positive for the stock. And when we discussed last time, as company continues to surprise on the intake from the international market, which I believe is slightly margin accretive. And we are also seeing fundamentally the losses narrowing down for Hyderabad Metro. I think the performance can improve and multiple re-rating can also happen as we discussed last time. I was at 22x FY25 numbers. So definitely, I think there should be a strong move in the stock in medium to long term.
Thanks a lot for joining us. Appreciate your thoughts.